Hey there, my name's Audrey, and I'm excited that so many of you were interested in hearing my story about student loan debt and the strategies I use to pay it off faster and more efficiently. I'm just a regular person, not a financial advisor, and everything I'm sharing with you today is based on my own experiences. I definitely still recommend talking to a professional advisor and/or doing your own research before making any major decisions. I know that my situation may be unique and will not apply to everyone, but I hope that at least some of my tips will help you save money, pay off debt, or become more financially secure. So a little about myself. I'm a physician assistant working in plastic and reconstructive surgery and have been practicing now for about 2 years. I have a biology bachelor's degree and a master's and graduated with roughly $100,000 in student debt, with interest rates ranging from about 3.5% to 7%. I have a passion for managing finances, and I like to set goals to get myself closer to being debt-free. I know that in undergrad and during grad school, nobody really taught us the reality of money in the real world, and certainly nothing about student loan refinancing or how to save money. I plan to walk you through the process of my loan refinancing experience, how I budgeted and set goals while using certain tools and applications to make things a little easier. I'll do my best to explain the terminology and answer questions that many of you have already asked in the Facebook group. So where is the best place to start? The first thing I did was create an account on intuitsmint.com. This is a free service created by the same company that makes TurboTax software. It is a safe and protected site where you link all of your loans, bank accounts, debit credit cards, and assets in one place to give you an overall picture of your financial profile. My favorite tool on the site is the net worth table and graph. I will admit that seeing my net worth as negative $100,000 was not an easy thing to process, but it gave me a direction and a visual goal to work towards. Each time I got paid or put extra money towards my loans, I could see that number get less and less negative. It was a very gradual ascent at first while I was just starting out as a PA, but as time went by, the improvement became a slow but steady upward slope. Now, having paid off just past 2/3 of my loans, I look back at that net worth graph and am encouraged by the progress I have made and know that I am on track to zeroing out that debt very soon. I will try to make a subsequent video going into more detail on some of these tools, but I'll briefly mention what else Mint.com has to offer. Budgeting. They have a great tool to analyze spending you already do by categorizing purchases, and it lets you create a digital budget of how much you want to be spending monthly on groceries, gas, shopping, rent, utilities, and how much you want to put towards savings or debt. Mint even sends you emails if you go over budget to give you a heads up. Credit score. They have free access to your credit score and how it's trending without having to sign up for a different service that may or may not be safe. It even shows you all of the open and closed accounts associated with your credit history, and it notifies you if a new account is opened. Setting goals. I set a goal of paying off my student loan debt in 3 years. After linking my loan accounts, I was able to see a breakdown of monthly payments and how much interest I would be paying if I paid a little extra towards my monthly payments each month. This tool tells you when your projected debt-free date is, and mine is currently this November 2019. Before I get into loan refinancing, let me tell you a little more about the day-to-day ways I saved money to be able to put more towards my loans. I had bought an older used car in college, and although it wasn't always easy, I kept it on the road as long as I could to avoid having a monthly car payment. When that car wasn't working well anymore, I replaced it with another used car and plan to continue driving it at least until I'm completely debt-free. Another thing is living situations. Obviously, for those of you who are married, have children, or other circumstances, you may be more limited, but as a single person, I tried to live as minimally as I could. My first year of PA school, I had 2 roommates who were my classmates in my program, so rent wasn't too expensive. The second year of school and my first year of practicing, I was actually a live-in nanny for a family with 4 kids. Whenever I wasn't in school or working, I was often watching the kids in exchange for having a place to live. This allowed me to take the money I would have spent on rent and allocate it instead to my loans. That next year, I rented a room in another family's home to keep my costs as low as I could. Side jobs. Even now, a couple of times per month, I do babysitting jobs, and now that I've taken an interest in photography, I do an occasional photo shoot or assist my photography teacher with photographing a wedding from time to time. It never hurts to be able to bring in a few extra bucks here and there. Credit card benefits and cashback rebate apps. I'll make a separate video going into more detail about these, but overall, I utilize the extra benefits from everyday regular spending to get extra money to put towards my loans or something more fun, optimizing the money I already had to put more towards my student loans. When my savings account was only making about 1% interest, it didn't make sense for me to keep money in that account when I was paying 4 to 5 times that in interest on a much larger principal. Whenever possible, I paid 2 to 3 times my minimum payment, which certainly helps to pay the debt down faster. Givling. I'm sure many of you have heard of the Givling Trivia app. I've been playing it about a year now. It's a free game that doubles as a crowd-funded student loan payoff opportunity. Each time you play, you gain points, which boost your place in the leaderboard to be selected to win $50,000 towards a student loan or mortgage. They also have random $10,000 winners and trivia high score winners too. You'll need an invitation code for that app, so I've included the link in the description as well. It doesn't hurt to have a little hope that your debt could be paid off by somebody else. Givling has already paid out over $2 million so far. So now on to loan refinancing. Probably about 8 or 9 months after graduating PA school, I decided to try refinancing my loans to get rid of those high 5 to 7% interest rates. I looked into the major companies like SoFi, Earnest, and Credible. All of these sites offer just a soft credit check to give you an idea of what rate you'll be offered. I found that it is completely fine to shop around and do these multiple soft checks with the different companies, as none of this showed up on my credit report. It is really important to find the best rate to make it worth refinancing. I ended up between SoFi and Earnest, as their offers were quite similar, within about 0.5% of each other. Earnest's offer was slightly lower than SoFi, but I did like the customer service and the brand security of SoFi, so I took a chance with negotiation, and after submitting my Earnest contract to SoFi, they were willing to match it for the same rate. So do not be afraid to show the other company a lower offer, because you never know what might happen. I had a very good experience with SoFi and never had any problems. They also have a great Facebook group for their members that allows anybody to ask questions, receive advice, and hear other people's stories. After being with SoFi for nearly a year, I decided I should look into getting an even better rate by refinancing. My income had increased some since I had worked as a PA for a full year, and the rates had overall gone down a little bit. I did another application through SoFi and checked out another company I had later heard of called LendKey. I was offered a significantly lower rate with LendKey versus SoFi's offer that was only a little lower than my existing rate. I did more research on LendKey, asked a lot of questions to their customer service team, and decided to go with them. Because their offer was actually even lower than the loans I had not previously refinanced with SoFi, I consolidated those with LendKey too for one straightforward monthly payment. So far, like my experience with SoFi, I have no complaints about LendKey and would highly recommend checking rates with both companies. I have included the referral links for these lenders in the video description below. Using any of these links saves both of us some money, so it's a win-win. SoFi gives you $100 when your loan is funded, and Earnest gives us each $200 if you refinance with them. At this time, LendKey does not have a referral bonus for new members, but it is all about which company offers you the best rate that will save you the most money in the long run. I highly encourage you to check with these multiple companies before pursuing an official application with a hard credit check. With all of these companies, there typically are no prepayment penalties, so it is not a hassle to make additional payments whenever you have extra money. I want to go over some terminology and answer some specific questions that were asked by some of you who messaged me on Facebook. What is a grace period? Most federal student loans have a 6-month period after graduation or when you drop below full-time student status, during which time you are not required to make monthly payments. This gives you time to choose a repayment plan or budget how much you can afford to pay per month. For subsidized federal loans, this also means that you are not paying or accruing any interest on the loan while you are in school and during the grace period. All unsubsidized loans continue to accrue interest even while in school and during the grace period, but again, you are not required to be making payments. And the interest does not capitalize on the principal until the grace period is over. What is capitalization? All the unpaid interest that accrues on the loan adds up in its own little section while in school and during the grace period, while the new interest continues to be calculated on the principal only. At the end of your grace period, all that accrued interest is added to the principal balance, and you will now pay interest on that new total. So for example, if you have a $1,000 loan with a 5% interest rate and an interest balance accumulated of $35, your 5% interest will continue to be calculated on that base $1,000 and not on $1,035. At the end of your grace period, all of that unpaid interest gets added to or capitalizes on the principal, and your same interest rate will be applied to the new total. So if after some time you've now accrued $185 in interest on that $1,000, you'll now be paying 5% interest on $1,185, and it will continue to compound daily from there. Any payments you are able to make while in school or during the grace period will help to reduce the total amount you owe and save you money in the long run. Extra payments before the grace period also help to decrease your minimum monthly payment that we required once you have to start paying. I had work study and small jobs that allowed me to make some payments on my loans before the interest capitalized. It is best to apply payments towards the principal when you can, because after capitalization and once your loans are fully in repayment, all your payments will first be applied to the interest. Any extra payments above that can be applied directly to the principal. To keep in mind, there is a tax deduction based on the amount of student loan interest that you have paid in a given year. This unfortunately is income-based as well, so as soon as your income is over a certain threshold, you can either only collect a small benefit or none at all from the interest you paid. The maximum deduction you can receive is $2,500 on your taxes if you meet the requirements. If you are single, once you have reached a modified adjusted gross income of $60,000, you get some percentage less than the $2,500. Once you reach $80,000 and above for income, you are no longer eligible for the student loan interest deduction. If you know you should be making more money because you expect to get a new, higher-paying job in that next tax year, it may be most beneficial to pay off more interest before it capitalizes to be able to get that tax credit. Remember that the amount you pay towards student loans itself is not tax deductible, just the amount of interest you paid that year. I've included a link to an article on Forbes.com that explains this a little better. When should you start refinancing? You can start looking into refinancing during school or while in your grace period, but I would wait until that period is up before actually refinancing. Private loans do not have a grace period, so once you finalize the refinance process, you have to begin making payments within that first month. Should you wait until you have a job? When applying to refinance, the lender will ask for your income. I recommend waiting until you have a job and get a few paychecks first. Remember that you can always refinance later if you get a raise, a better job, or another circumstance that improves your income. Do you have to refinance all of your current loans? I had a few loans that had rates that were already lower than the advertised rates for refinancing when I went through the process. I left those lower rate loans alone and refinanced everything else. This did mean that I had 2 separate monthly payments to different lenders, but with autopay, I didn't have to worry about forgetting to pay one. Why shouldn't you consider refinancing? If you plan to work in an underserved area or with any program that has loan forgiveness, you will likely lose those benefits by refinancing to private loans. Think first about what you want to go into and where you'll be working. Also, consider that some public loan forgiveness or underserved jobs end up paying you less money in exchange for paying down your loans. If you land a well-paying job, you might be able to pay off your loans faster on your own and not be limited by location or specialty. You also have to consider if the private loan has certain benefits, including what happens to your debt in the event of your death. If you have a cosigner, that person will likely be responsible for paying off your debt if you died. So without a cosigner, sometimes the lender cannot collect anything. To be safe, I do recommend getting a life insurance policy that would be able to cover your debt if necessary. but be sure to read the terms of any refinance contract very thoroughly before signing so you know exactly what you're getting into, and don't be afraid to ask the customer service reps a lot of questions. Which rate type is better, variable or fixed? All of my loans have been fixed interest rates, which offer the security of knowing that your rate won't suddenly go up. Fixed rates are often a little higher than variable, at least initially, but fixed is predictable. You'll want to read any loan contract carefully before going with a variable rate to see how much the lender can increase your rate within a period of time. If you have a smaller debt and plan to pay it off relatively quickly, you might be safe going with a variable rate. What is the best loan term? I had set a goal of paying off my debt in 3 years, so I picked the lowest term option of 5 years. If you don't have enough income to feel comfortable with higher monthly payments, you can always choose a longer term to start and can refinance later. Typically, the shorter terms have the lower interest rates, so you won't get the advertised best rate if you go with a 7, 10, or 20-year term. One thing I wish I had done early on, I decided shortly after finishing undergrad that I wanted to go to PA school. Between getting patient care hours, working 3 different jobs to make extra money to pay for school, and filling out applications, it was about 2 years before I actually started in the PA program. After my 6-month grace period ended, I had to start making payments on my undergrad loans. I initially tried to pay as much as I could towards those loans to minimize my debt before adding grad school debt. Knowing what I know now, those loans were subsidized and had lower rates than my grad school loans. I wish I had just made minimum payments on those loans and saved more money to put towards grad school to avoid having to take out as much more debt. Once I enrolled full-time in PA school, all those subsidized undergrad loans went back into an in-school deferment, so I didn't have to make payments, and the interest stopped accruing again. You do have to keep in mind that you only get 1 6-month grace period, so if you go back to school and have already used your grace period, you will need to start making payments within 1 month of graduating on those previous loans. So if you're still finishing undergrad and plan to go back to school soon, consider the overall picture before you pay down those lower rate subsidized loans too fast and diminish those benefits when you know you might need them later. Well, that's all I have for now. I hope this video has been informative and useful. I do plan to make some other videos going into more detail on some things, as well as to update you all on my progress to being debt-free. Please feel free to comment your thoughts, any questions you have, or any ideas for future videos, and I will try to address as many as I can. Please subscribe so you'll be notified of all my future videos. Thanks and have a great day.